Let's go across to the management of Dwarikesh Sugar. Joining us on the show, Mr. Vijay S. Banka, the managing director there, is with us. Hi, Mr. Banka. Thanks so much for making time and speaking with ET now. Well, as my colleague was pointing out, there are multiple tailwinds for the sector, but let's take it one by one. We understand that the pricing of domestic sugar has already gone up by almost 3 to 4 rupees, but as the festive season picks up, are you expecting the prices to go up further?
Well, if you see the FY 2022-23, the prices were very flattish. They remained muted throughout the year. They were hovering around 34.50 rupees per quintal. But yes, since then there has been a rally, and the sugar prices are currently ranging between 3,700 to 3,800 rupees a quintal, which is the kind of price level we saw sometime in 2016-17. So since then to now, yes, the prices have been steady, but now the prices have gotten better. Now, few things internationally, sugar is trading at an all-time high because when the initial estimates of production were drawn by the global agencies, it was estimated that this could be a surplus year. But as with the advancing times, now it's felt that India is not going to be that much of a surplus sugar producing nation this year. Thailand is under the spate of El Nino, so again the Thailand production is going to be lesser. Brazil, of course, will have a good production, but yes, the overall estimate is that of a small deficit the coming season of 23-24. So the international prices are high, and additionally there is capping on the export of sugar from India, so that is also provided the impetus for rise in the sugar prices internationally. But having said that, I must also say that the international prices have not found so much of resonance in the domestic market prices, obviously because of the capping on the exports. But yes, sentimentally there has been impact. It's now we find some reflection of the higher international prices on the domestic sugar prices as well. So the going seems to be good as of now. And we are not looking at a great sugar crop within India in the coming season because of bad weather conditions in Maharashtra and Karnataka. And even UP has had some excessive rainfall, which is, the rainfall should be evenly spread.
Right.
A deficit 1 month cannot be compensated by an excessive rainfall in another month. So that's been the trend.
Yeah, no, Mr. Banka, this is exactly what we were discussing with our guest from IMD as well, Dr. Pai, who was saying that there would be a catch-up. But yes, the spottiness of rain is a bit of a bother. But just coming back to the point, you said right now it's trading at around 3,700 per ton. But what could it inch up to? Do you see the likelihood of it becoming, let's say, 40 rupee per kg, 42, 45? Any internal targets?
No, I don't think there's going to be any runaway increase in the sugar prices, because these prices are there to stay till the festive season of Diwali. But even before the Diwali comes, the sugar mills in Maharashtra are going to commence crushing and production. So we don't see prices reaching levels of 40 or so per kg. But yes, 3,700 to 3,800 these are kind of levels at which we expect prices to remain steady. And going forward also, since we're looking at a tight supply situation in the coming season, the prices should be sustainable at, if not 37, at least at around 3,600 rupees or so.
Sir, ethanol has been one of the major growth drivers, not only for Dwarikesh Sugar, but for the entire sugar industry. What is the outlook here? How are the prices trending? And do you have sufficient raw material to produce the demand that has been asked by the oil marketing companies?
Yes, we've had, I think in this current season of ethanol, I think we should be achieving blending target of about 12%. Obviously, the next year's target is 15%. So the sugar mills have enthusiastically ramped up the production capabilities for producing ethanol. Increasingly, all are looking at sacrificing more of sugar production in favor of ethanol. We have also done the same. We've cut down our sugar production by nearly 30%. So ethanol is a game changer for the sugar industry. It's compressed our working capital cycle also because the payments from we are not required to hold ethanol stock for longer periods of time. The payments from the oil marketing comes in reasonably good time. So it's been a game changer, and the margins are also decent. Although I must add here that one of the feedstock that we use for making ethanol is juice, cane juice, and syrup directly, which is where the prices announced by the government are not so remunerative. We would expect that to get better so that more sugar mills are incentivized to sacrifice more sugar production in favor of ethanol.
Sure. So,
And that is where we also see more capacities also coming up if that happens.
sure. So, Mr. Banka, that's exactly the next question. Are you also adding more capacity in that ethanol vertical, and what could it contribute to your total revenue? Street is penciling anywhere between 35 to 40%. Is that a realistic assumption?
Yeah, 35% is what I would say it would be a realistic assumption.
Okay, fair enough. You've also been, one of the key, benefits for you is that you're a low-cost producer as well. Talk to me about what kind of margin expansion do you anticipate from the current levels, if any?
Yes, we have had a history of clocking the best recoveries in the north of India. But the last two seasons have not been that eventful in the sense, the red rot infestation has kind of devastated the command area of one of our sugar units. So we have had a setback insofar as recovery is concerned last season, but we have taken adequate measures. So we are bringing about a big varietal change, number one, and number two, we are also trying to protect the ratoon crop by application of quality insecticides and pesticides and the fertilizers. So all those efforts are being done so as to ensure that we get back to our recovery that we had clocked 2 seasons ago. So obviously, this is one thing which is under our control because the industry, as you're aware, is totally regulated. Sugarcane price is decided by the state government. The sugar prices are market-driven and, of course, regulated by the central government in some sense. So efficiency is one thing which we constantly look at improvising and enhancing. So we're working on that.
The report that we were just talking about, they're also saying that given the fact that sugar prices are expected to remain high, plus ethanol demand will be strong, they're expecting a strong earnings growth from Dwarikesh Sugar as well. In fact, to be clear, from FY23 to FY26, they're expecting the earnings to grow at a CAGR of around 19%. Do you think this is very easily achievable, or are your growth targets a bit higher compared to what the brokerage is expecting?
No, according to me, it would be preposterous to talk about what kind of earnings we will have in the full fiscal because, the season is yet to start. The season of 23-24 is yet to start. We are awaiting announcement of SAP, that is the sugar statutorily administered price for the season 23-24. So we do hope that the price increase, if at all is there, is reasonable. And because the government has already achieved the target of doubling up the income of farmers by taking up various other measures such as improving their productivity, etc., ensuring that the mills pay on time to the farmers. So all those measures have been taken. But with a lot of factors, there are various multiple various drivers which could drive our profit one way or the other.
Okay. So 19% over 3-year period could be achievable, right?
Yeah, we guess so. If everything goes right, yes, why not?
And lastly, sir, just debt reduction targets. What do you have in mind? Is there a plan for that as well?
No, we have, the long-term debt that we have on our book is all subsidized debt, which is available, which carries a rate of interest of about 4 to 5% per annum. So there is no real incentive to prepay those debts. Insofar as our working capital debt is concerned, we have moderated it substantially. Where our peak level requirement used to be something like 700-800 crores has come down significantly. So there is, if you have seen our numbers, there has been a substantial reduction in our interest costs, and we expect this trend to continue. We would focus to rationalize on our interest cost at all times to come.
Mr. Banka. On that note, we let you go. Appreciate you making time for ET now. So that's the word coming in that the prices are firm for now. Of course, they are not going to have a runaway rally, but nonetheless, 37 rupee per kg is what we'll have to pay and shell out as we head into the festive season. But